This is the CEO Barbecue. My name is Antonio, and today we're looking at the highest grade and the world's second largest natural graphite deposit, which apparently is in central Kazakhstan. And there we'll be talking with Sean Gregory, the managing director of Sarytogan Graphite. As always, this is going to be a long, in-depth conversation, so feel free to use the timestamps provided in the description and on the time bar to better navigate the video. And if you want just a quick 10-minute summary of this conversation, go to resourcetalks.com for the written version of this and all of our previous interviews, as well as consider subscribing to our free email list, which sends a weekly summary to your inbox with all the interviews from the prior week in bullet point summaries. And before we get into anything here, I would like to warn you that we have received no monetary compensation for the production of this video from the company that's being interviewed. However, please understand that this channel is a business that sells content producing services to companies, which means you cannot rely on this video for research, and you should treat this as an advertisement instead. Research is conducted by reading the company's official filings, which you can find on setterplus.ca. And please only proceed if you know what you're doing. This interview is intended only for experienced junior mining speculators because mineral exploration, development, and mining is a very tough business where failure is the norm and should be the expectation. This is going to be a conversation that is general and impersonal in nature, containing forward-looking statements. I am not a licensed financial advisor, so before continuing on, please talk to an investment advisor with a good long-term track record because your capital is at risk, and I am not a financial advisor, and I do not have a good long-term track record. If you're not 100% sure you understand 100% of the disclaimers I just showed you, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said therein. That all said, Sarytogan is listed as SGA on the ASX exchange over in Australia, where over the last 3 months, the average volume has been about 220,000 shares. The stock's 52-week high is 23 cents and its 52-week low is 3.5 cents. With a market cap of just over 8 million Aussie dollars and just under 181 million shares outstanding, today this is a 4.5 cent stock with a 50 and a 200-day moving averages at respectively 3.6 and 4.3 cents. Now, this is also where I typically give you the breakdown of warrants and options and the potential dilution and everything that might result in, but this is ASX, so luckily we don't have to deal with that this time. And there are only about 2.5 million unlisted options. There are 21 million performance shares locked away though in here, so that's worth noting. Directors of the company own just over a quarter of it, or 26% to be specific. The European Bank for Construction Development owns just under a fifth, and the top 20 shareholders of the company also own a significant chunk, leaving less than half of the company or half of the shares in the hands of about 2,000 retail investors. Moving on, I'll be looking at the financial statement, the latest of which shows us the numbers as of December 31st, 2024. And that's when the asset side of the balance sheet held about 2.6 million Aussie dollars in current assets, most of which, so $2.3 million to be specific, at the time was in cash. There's no long-term debt, so the liability side of the balance sheet is comprised of only current liabilities and specifically account payables and provisions for respectively $120,000 and $100,000. Worth noting before that, though, Sarytogan recently got the European Bank for Construction and Development completing their second tranche of their investment in the company, with the remaining 2.36 million Aussie dollars being put in, and thus placing them again at almost a fifth, or specifically 17.4% ownership after being a 9.9% owner through their previous investment. That was phase one or tranche one before that. But all of this means Sarytogan now has more money than what the end of the year balance sheet showed us. So they're about 3.5 million Australian dollars right now. Moving on to the P&L for the 6 months that ended on December 31st, Sarytogan recorded just under $1 million in expenses, 948,000 to be specific, but not all of that was an out-of-pocket expenses. There are some non-cash costs in here as well, including a $32,000 share-based payment, as well as about $1,000 worth of depreciations. That leaves their administrative expense at about $914,000 out of pocket, which is an average of about 152,000 Aussie dollars a month. Now, almost half of that money, 46% to be specific, was spent on employee benefits and another almost half on administration. Exploration and evaluation expenses here get capitalized. So it is note 7 of the financials that shows us that spend, which for the half year sat at about $2.1 million or an average of $357,000 a month. This is where I'd normally give you two ratios, with one of them being the drilling to marketing ratio, but their financial statement doesn't provide those specifics. So instead, I'll just tell you their exploration to administration ratio as a whole, which for those last 6 month period was about 2.3, meaning 2.3 times as much money went into the ground than what was spent on running the company, which in percentages means that about 70% of the money went toward exploration and so 30% toward administration. As always, though, for viewers and listeners, please stay on the safe side and go look at their financials yourself and do your own research. They provide the official filings and official financials on their own website. That all said, though, enough accounting, at least for the next couple of hours, because again, we're going to Kazakhstan, where Sarytogan has what looks like a very high grade, large graphite deposit. They say it's the highest grade, as I mentioned at the beginning, and the second largest natural graphite deposit in the world, with a defined 229 million tons at just under 29% total graphitic carbon. The asset is currently at the PFS stage, so it is relatively advanced, with early DFS works having already started. That includes stuff like power and water and road studies and all these things, as well as infield drilling is going on and variability testing. There's met work. There's a lot to be talked about there, which we'll do later on in the conversation. That PFS, by the way, showcased a staged approach for building this asset. So it's a 4-stage approach, with the initial stage costing $62 million in, again, initial capex to just get it going, into what they call stage 1A, which is a 50,000 tons per annum operation. And in total, for full capacity, it will take a total of what I'm estimating is 344 million Aussie dollars. How they plan to get that money is, of course, going to be part of the conversation later today as well. As you can imagine, this is not the most exciting stage of the Lassonde curve, but a lot has to happen in this stage. So there's loads to talk about there. But there's also, it's not only graphite that we'll be talking about today, because there's also a few copper projects, interestingly enough, in this company as well, which means that there's even more to talk about, which on its own means that it's time for me to shut up and Sean give you the word already. But first of all, thank you for sitting down with me today.
My pleasure, Antonio. Thank you very much for having me on your channel. And yeah, delighted to talk you through Sarytogan Graphite.
Pleasure's all mine, of course. I'm looking forward to learning about it. I don't get to hear about graphite all too often. I think I've heard one or two stories over the last couple of years. So I am looking forward to learning more about it. But since this is your first time on the CEO barbecue, we do have an obligatory smell test to go through first. And we're going to start off with the man himself. I suppose it should be the MD barbecue, but it's not yet fixed for Aussie companies. So you, as an MD, who are you and why do you think you're the right man for the job?
Well, firstly, I'm a little bit concerned, Antonio. I didn't realise I was going to get barbecued on your show, but hopefully that's not the case. So look, my name's Sean Gregory. I'm a geologist with more than 25 years experience, initially in the Western Australian mining industry as a mine geologist and working on operations in iron ore and lithium projects. Initially with BHP Billiton for the first 10 years, and then subsequently with some major project developments with Murchison Metals and then Mineral Resources Limited, which is a multi-billion-dollar construction company. And I helped them in their initial stages of being mine owners and everything that is required to be a mine owner. So through that process, my real passion is developing projects, taking projects from that late stage exploration and bringing them to reality. And I've been very lucky through my career to be involved in many successful mine developments, from the very largest of the BHP iron ore mines in the Pilbara through to a series of mines with Mineral Resources, where we opened more than half a dozen mines in as many years. And so in terms of developing new projects, that's my sweet spot and what I really enjoy. More recently, I've had the pleasure of leading ASX listed companies, and this is my third go at an ASX listed company as CEO. The first one was a company called Barra Resources with some gold assets in Coolgardie, and we did a pre-feasibility study on a copper nickel project, also in Western Australia. Then I went to Great Southern Mining, which was gold exploration in Western Australia and also in Queensland. And now, of course, it's graphite development and copper exploration with Sarytogan Graphite, and that's taken me to Kazakhstan, which I must say I've really thoroughly enjoyed the travel and working in what I consider to be a very favourable mining jurisdiction.
Hmm. Do you speak the language? Do you speak Russian or Kazakh?
No, not at all. So, look, language isn't my strong suite. I'm good with numbers and solving puzzles, but language isn't my strong suite.
Hmm.
But I'm very fortunate that through the IPO, it's been a real partnership between our technical director, Dr. Waldemar, who is our 25% shareholder, our founder, the vendor for the project, a Kazakh geologist who, with more than 50 years' experience, who now lives here in Perth. So it's been a real partnership between Waldemar and I. And to be honest, it wouldn't be possible for a boy from Perth to go and do what we've done without having that perfect mentor to introduce me to Kazakh culture. And here we are now, 3 years down the road, and very much I feel very comfortable now in terms of the network of contacts, both within government and industry that we've built up, the team that we've built up, that you know, not quite a local, haven't got the language bit down, but at least know my way around the mining scene in Kazakhstan.
Hmm. It's MinRes is in an interesting situation right now. I suppose we could do a whole podcast talking about that alone.
Yeah.
But does any of the prior experience you were involved in, does that, were you ever involved in a sale of an asset where you brought an asset to a certain point and then you've sold it, or was it all focused on essentially putting stuff into production?
Yeah, I guess so. My role there, I was General Manager Technical Services. I oversaw exploration, mine planning, tenements, environmental approvals, environmental compliance, um, and the like. And through that process as well, as MinRes bought and sold assets, I was keenly involved as part of the team there, assessing those opportunities. Um, and so through that, obviously all the decisions there, are made by the board and the MD. But for my part, I was advising on many of those transactions, and I was pretty fortunate to be involved in some real crackers. Certainly, the acquisition of the West Pilbara project, to see that now come to fruition is very gratifying. We always saw the potential in that. And I was also lucky enough to be involved in the acquisition of the Wodgina mine. And all credit to Chris Ellison. He is absolutely a master deal maker. But look, we acquired that asset for $50 million. I did the due diligence on the site trip, went up there, found a sea container full of old pulps, grabbed a box of them and got them reassayed. And I said to Chris, gee, there could be, based on what the existing tantalum resource and what we could see in the pits, I said to Chris, there could be 27 million tonnes of spodumene resource here.
Hmm.
Turns out I was wrong by a factor of 10. We drilled it out, and it was one of those ore bodies that just expanded and blew out at depth, which was a real pleasant surprise to everybody. And not that long after acquiring it for $50 million, Chris sold 50% of it for $1 billion. So that was one of the best deals I've ever been involved in, and have very much enjoyed that aspect of the mining game.
Well, what about the rest of the team? I mean, it is a very specific commodity that you're dealing with here, but both the geology, but also if you were ever to bring this into production, the marketing of graphite. When I say marketing, I'm talking about actually selling the product, not marketing the stock. So, do you guys have in-house experience specifically related to graphite?
Look, it's been a bit of a journey, really, for the whole team. So initially, Waldemar acquired the asset in 2018, and he set about drilling out the asset privately initially. And of course, we then IPO'd it. I joined about 6 months before the IPO, and we IPO'd it together in 2022. And look, we've both learnt a lot about graphite along the road, and you look back now and actually say, well, hang on a minute, now we're actually experts in this field of graphite. We've been helped along the way, obviously, with consultants and so forth. But we've made appointments as well along the road, and it's worth me outlining our senior management team that assists us. So on the marketing side, I think you mentioned about graphite. We recently hired a general sales and marketing director, a fellow from Brazil. Antonio Assis is his name. And he has done nothing but sell graphite for the last 15 years, most recently for a company called South Star Battery Metals in Brazil, who have just commissioned a graphite mine. And prior to that, for many other big graphite companies, Tecnographite, Unimetal, Nacional de Graphite in Brazil, and also in the early days of Syra Resources as well. So he's been a good addition to the team, and he's working hard on the marketing front. We have a Russian-speaking CFO, consultant CFO, fellow by the name of Sarkis Akapov, and him being Russian-speaking is of great assistance to me. And then in amongst the local country, we have a number of senior staff members there as well, all very, very qualified and very capable, heading up their own disciplines. So we've got a team in country there of about 8 people, and a really great bunch of professionals.
So your graphite sales guy, essentially, he has transacted graphite before. It's not like, where I'm coming from with that question might sound a little weird because that's his title, but sometimes I'd interview uranium companies and they would take on uranium salespeople who've never really sold a pound of uranium. So has he actually been involved in the process of selling graphite?
Oh yeah, 100%. Thousands and tens of thousands of tons of graphite. As I mentioned, the early days of Syra, Nacional de Graphite in Brazil, Tecnographite in Germany, Unimetal, and most recently South Star Battery Metals, who have just been who've been through the process that we're now halfway through that process of starting a new mine. So yeah, absolutely. Antonio sold tens of thousands of tons of graphite.
Okay. Well, good. That's something that I always check about. I do want to talk about how incentivized that team is that you just told me about. Again, I see that director ownership is 26%. You told me about, well, most of that, really over 90% of that, 26% is Waldemar himself,
Yes.
as far as I understand it. How much? So how much of the company do you personally own?
Sure. So look, Waldemar's got 25% of the issued capital as the vendor. He also has some performance shares on the performance of the asset. And then for my part, I own 1 million shares, and I have outstanding performance rights in the order of, I don't know the number off the top of my head. It's about 7 million performance rights. And some of those are tied to various milestones like delivery of the DFS mid next year, and then production-based milestones to deliver graphite concentrate to market. In terms of the rest of the team, look, recently we did just make an issuance under our employee share option plan, which I believe was about 1.5 million shares spread amongst our senior team in both Antonio Sarkis and the team in country. With some of that is options, and some of it is performance-based milestones, cascading my performance milestones. So look, we've got the team sort of set up to enjoy the success of the company.
Well, it's. I was about to ask you about those performance shares, the 21 million there that you mentioned. Um, what about Waldemar himself? So so he vended the asset, got 25% of the company. What is
Yeah.
what do you think is the average cost of those shares that he got, and what are the average cost of shares that you got?
Well, I guess they're quite different. So for Waldemar, the shares were consideration for purchasing the asset.
Mhm.
So essentially, we IPO'd at a 20-cent valuation, and so those shares were issued to Waldemar at that 20-cent valuation at the time. So that works out to be about 9 or 10 million dollars, which was, if you like, a part of the purchase price or the purchase price of acquiring the asset. And for my part, those performance rights, they're subject to achieving milestones, but there's 7 million of them outstanding.
Yeah. Waldemar was selling some shares, I believe, earlier this year. I did find an article talking about that. What was happening there? Is a plan for him to keep selling and lowering his position, or how do you see that?
No, that was a one-off event back in about July last year, where Waldemar, through his own business dealings, transferred some shares to two other large shareholders. But that was a very much a one-off transaction,
Hmm.
where Waldemar's shareholding went from in the high 20s down to the 25% it is now. But they were two off-market transfers.
Right. So that was a one-off event, or I'm basically an important part of my research is trying to figure out the supply and demand of shares, and so that's why I'm asking
Yes.
about that. Is he expected to be on the supply side of those shares?
Look, absolutely not, and I think all the directors, appreciate that we're in it for the long run, to deliver outcomes, and the other thing, of course, with a large shareholding like that, there simply isn't the liquidity to move those shares, and I think everyone agrees that would be a disastrous thing to see a founder and major shareholder start leaking shares out on market. So no, there's absolutely no way any reasonable person would do that. And so look, but to get to your point in terms of how much of the stock is locked up, look, there's quite a lot locked up in terms of 25% with Waldemar, 17% with the bank. And you put in the top 20, and more than half of the shares are in positions that are pretty difficult for people to move. Now, obviously, we have seen some weakness in the share price. We did have some selling from some of our IPO brokers throughout 2024 and 2025. And that's a shame. But look, every shareholder's got a right to buy and sell, and those guys have now fully exited their position. And in terms of the recent decline in the share price, um, um, I'm pretty confident and hopeful that is behind us.
Hmm. Sometimes the absence of selling is not enough to keep a share price up. Most of the times, you also need buying. How is the insider ownership and insider buying? How's that incentivized? I mean, are you guys? Is there any internal policies, or do you talk about buying in the open market? Is that incentivized, participating in future financings and stuff like that?
I don't think there's any way to incentivize those sorts of activities. Obviously, any employee and director has got an opportunity to buy shares on market. They have to work within our share trading policy, which has got plenty of blackout periods and so forth. But look, in terms of where Waldemar sits at 25%, I think he's adequately incentivized, and for my part as well, with the performance rights and so forth. Look, I have done a little bit of on-market buying over the years, but really just sort of token amounts when to send a signal uh, uh, to the market. But look, my expertise is as a professional manager who's got a track record of starting mines, and that's what I'm here to deliver.
Do you expect to be doing more of that in 2025, or are you going to be on the bid?
No, look, no, I don't plan to buy on market.
Okay. Well, staying on the topic of of insider incentives, talk to me about royalties. Do you or any of your colleagues personally own a royalty on any of the projects?
Yeah, so look through, and this is all, of course, in the prospectus and annual reports over the years, but look through the vend. Waldemar is also the beneficiary of a 3% vendor royalty on the project as well.
How is that potential conflict of interest going to be managed there? The stock price and the value of the royalty don't always go hand in hand. What do you think the value is of that royalty versus what the value of the 25% shares are?
Well, look, the value of the royalty is simply 3% of our mine gate revenue, effectively in perpetuity, because the mine life, look, the reserve goes for 60 years and only consumes 4% of the resource. So effectively, it's in perpetuity.
Well, again, what I'm trying to understand here, why I'm coming with these questions here, Sean, is because I'm trying to understand who are you guys working for? You're working for the shareholders. You're working toward, making the royalty valuable. Or you're working toward. That's what when I say incentives, that's what I'm trying to understand. What would if I stepped into the story today? What would my counterparty, that being you, what would your incentive be to work on this company?
Yeah, so look, obviously, look, to be honest, I don't see a disconnect between the value of the royalty and the value of the shares. They're one and the same thing. Get the mine into production. That's and at maximum MPV. So there's plenty of incentive there. In terms of the management team, look, I derive professional satisfaction out of starting new mines. I've been lucky enough to do it on many occasions. There's probably 10 mines I've played a hand in starting, and that is certainly what I derive my professional satisfaction from. And in terms of the opportunity with 7 million performance rights, get the share price up to an operating mine. Where could that be? Look, MPV of the project comes to, where does it land? About $250 million. So certainly share price of well above $1 is certainly a target in terms of a full MPV of the company. And that's the opportunity for me to add a bunch of value for shareholders.
I do want to talk about evaluations here, and I'm through the main questions here that I've got what I call my smell test before we actually get into the barbecue. This was not the barbecue, not yet.
Here we go.
I do want to talk about the valuation here because if you again you've got what you call the highest grade, second largest graphite deposit in the world. You're talking about having the right team, the right incentives, and everything you've told me so far. Why are you only trading at an enterprise value of 8 million? I mean, surely there must be a catch or something else. What's going on here?
Yeah. Look, it's a fair question, and it's a question that we ask ourselves every day. And you may see there's some bubble charts that we pulled together earlier this year that does some benchmarking of our project against our peers, that does identify a real disconnect in the quality of our project and the valuation. So a couple of things are at play there. One, in terms of, when we came onto this and IPO'd this project in 2022, there were several other graphite projects that were far more advanced than ours and had achieved valuations of several $100 million, the likes of Syra, Talga, Renascor, these sorts of companies. Now, pretty well and of course we came on board at our 20-cent valuation at the time. But pretty well since then, the sentiment for graphite has been on a downward trajectory almost continuously. And while those guys came off a base of maybe $2 a share, we came off a base of 20 cents per share. And I guess in that falling tide, there hasn't been that excitement around graphite to see the buying pressure, necessary to have the share price go up. So it's really, we're in this situation where there is very little sentiment for graphite. And as I mentioned, there have been a couple of shareholders, looking to liquidate their position into a market with no liquidity, and that's where we find ourselves today at 4 to 4.5 cents. So look, all we can say is that the value differential is pretty compelling from an investment point of view. And I think, shareholders or investors, should look at the likes of, the investment from the EBRD. I can assure you the amount of due diligence, both technically and legally, that was done, that extended over about an 18-month period from when I first met those guys to when we managed to achieve the investment with them. And it was absolutely extensive, where they shadowed every technical area of the business. So look, we stand on the quality of our asset, and based on those bubble charts and that valuation, the board has taken a decision to move forward with the DFS. One school of thought says, gee, maybe we should sit around and wait for things to improve. But look, we don't consider hope to be a strategy, but rather we know that we've got a world-class asset, and DFS was supremely positive, and on that basis, we're moving forward with investment. Now, what we do know is that the mining industry is highly cyclical. I'm prepared to call now as the bottom of the sentiment in the graphite industry. But of course, these things take time to turn. But I tell you, when we're at the top of the market and in the future, and people are looking for graphite stocks to invest in, I think on every metric, Sarytogan Graphite measures up superior, and that's when investors will pile in.
Well, okay, but you're at 4 cents now. You said targeting $1. That's 25 times higher. I think shareholders would be ecstatic if you get half of that, or just a portion of that. I mean, a 10x or even a 5x. I think if everyone, a lot of the shareholders will be very happy with it. But how do you get it? Is it really only graphite beta that could essentially save you here, or is there something else that you could do on the company level that gets you at least a little bit closer to that targeted valuation?
Yeah, look, so there's a couple of aspects to that. I mean, firstly, we consider the opportunity to add value to the graphite project to be extraordinary. When we look at the benchmarking against peers, the quality of the project, we do consider that the project's undervalued. What can we do to resolve that? Well, we can catch up to our peers, catch up to those companies like Sarytogan and Renascor and the like, in terms of completing the definitive feasibility study. And not only that, but progressing the other aspects of project development in parallel, things like marketing, things like financing, which I'm sure we'll get to. And so by progressing all of those aspects of project development, we believe that the investment proposition will become more and more compelling for Sarytogan. Now, overlay on top of that some sentiment returning to graphite. At the moment, there's zero, but as I mentioned, we're at the bottom of that cycle. And in the 12 months that it'll take us to finish the DFS, we believe that we're moving into a rising sentiment for graphite. So, that's, I guess, what sort of, for us, turbocharges the investment proposition. Now, as well, you mentioned, the alternative. What else could the company do? Well, the company could find other commodities that are perhaps more in favour. And I guess that's where we have done a little bit of dabbling in copper exploration as well, and that's an opportunity for us in the future as well.
Hmm. Why don't you take it private? I mean, you're looking at the European Development Bank and Waldemar together. They own about 40 something percent of the company. You're at 8 million now. That's whatever, 4 million left. Um, that's what, 2.5 million euro or something like. I mean, it doesn't. And then you have your next top 20 shareholders owning a bunch of the companies. Well, it doesn't seem like it'd be impossible to take it private at this point. Why do you have to be a public company now?
Look, it's a good question, and yeah, to be honest, there is a little bit of yeah, from my point of view, it's pretty disappointing that we haven't been recognised in the ASX the way I feel we should.
Hmm.
But at the same time, look, we're in terms of raising new capital. The advantage of being a listed company is you can offer incoming investors some degree of liquidity, and investors coming in, they're always interested in what is the exit strategy. How do I realise this gain for the investment? And yes, I acknowledge we've got some work to do to increase the liquidity, both through our own promotional efforts, our own project efforts, and also that returning sentiment. But being a listed vehicle offers that liquidity, which is in terms of new money coming into the company. People want an opportunity, as you mentioned. I've got a plan to take this company on call it 10 times, 20 times, whatever the valuation metric is. But if investors, for whatever reason, want to step off at 2x or 5x or whatever, being a listed company allows them to make that decision individually.
Hmm. That's yeah, it is an interesting approach. It does make me think about financings as well, and I do have it on my list, but it'll make sense to talk about that later. As in, if you have to actually get those 60 something million, whatever, how do you get it, debt, equity, whatever. So we'll talk about that later on. Talk to me about the history of the asset first. I mean, you said Waldemar got the asset in 2018. If I'm not mistaken, that's when Kazakhstan reversed its mining code to mimic that of Western Australia. So I suppose that's where that connection come from. But when did you start? Like, when did Sarytogan start working on it? And how come, maybe in the first place, why do you have the asset? Why did nobody else beat you to it?
Yeah, look, it is a great question because it is an extraordinary asset. Now, look, it was first known about the first records in the literature is in the 1980s during Soviet times. The Soviet geologists first did some drilling at the site, and they did some basic metallurgical test work, of which unfortunately the records weren't as clear as we would have liked them to be. But look, I think if you turn your mind back to 2018, a couple of things have gone on. One, there was the new mining code in Kazakhstan, which really opened up many more areas for exploration than would otherwise be the case. That was passed in 2017. And two, at the time, graphite was probably in the last low point. As I mentioned, these things go in cycles, and we're in a low point here in 2025, and the last low point was probably 2018. So there wasn't too much interest in picking up graphite projects. The other thing as well is that the deposit was known to be very fine grained. And at that time in 2018, if you look at all of the promoters of graphite projects, it was all about the flake size. There's small, medium, and large flakes in a graphite deposit, a typical flake graphite deposit. And the large flakes do achieve a premium over the fine flakes. However, that's for an established industrial market that doesn't really have a growth profile, whereas the exciting profile is actually in the batteries. And to make batteries, you need fine material. And turns out the finer the better, and we are the finest of the fine. So that was a real paradigm shift in what was considered a world-class graphite asset. So it wasn't really loved too much, and that is why the ground was vacant and available for pegging. And of course, Waldemar was able to do that through his long history of exploring and entrepreneurial activity with mining assets in Kazakhstan over his long career. So he set about drilling it out with his own funds in 2018 and 19 and 20, and managed to achieve an inferred mineral resource. And that was what we IPO'd off in the back of 2022. But that's all it was. It was just an inferred resource. We didn't have a clear metallurgical pathway for the project. There were real question marks over this flake size question, and we were still looking for coarse flakes. And as it turns out, we didn't find any. And as it turns out, we're actually really pleased with what we do have. And so at the IPO, this giant resource that really knocked everybody's socks off in terms of the tonnage and the grade, but still question marks over the metallurgy. From there on in, of course, we solved the metallurgy and we solved it in spades. Achieving the exceptional purification results, it was a really exciting time. Initially we achieved 98%, and then we achieved 99%, and then we achieved 99.9, and eventually we achieved 99.9992% purity. And with every new test, we were wondering whether we were going to achieve 103% purity in the next test. It was that sort of quite an exciting time. And then with all of the product testing and we've shown this our different products to outperform every one of our three product families outperforms incumbent products in the marketplace, and we really feel we've got a very compelling offering for the market.
What do you do with all that? I mean, what's the business strategy here for you in that case? Are you going to be, what's your preferred business strategy, I suppose? Because there's many ways that this conversation could go otherwise, but would you prefer to see this being brought into production, or do you think it makes sense for someone else to take it over again, given the size of the capex and the size of your market cap?
Yeah, look, as a general comment, with any listed junior company, you must conduct your activities as if you're going to build it yourself. And then, okay, if the tap on the shoulder comes from Big Brother and it's a good outcome for shareholders, well, happy days. I will say, however, in terms of our development strategy, we have kept it achievable in that, look, our current market cap, look, that could change, very quickly. We could get that market cap back in shape. But the staged development strategy, where we initially just do our upstream business for $62 million capital, I actually consider that to be a really affordable capital and something that actually is within reach. And particularly with the strategic nature of the asset, we're having, we've got the European Bank for Reconstruction and Development on board, and they'll help us do our work to meet the standards for international banks for the debt piece, but also for the equity piece. The amount of money by development finance institutions, these are government entities, quasi-government money. The amount of money that is out there for projects like this, we do actually consider that $62 million to be eminently fundable. And for my own part, I do have the expertise in being involved in project developments. And so, yes, it's something that we dearly like to do, is to take this through all the necessary steps and to build this mine.
You're talking about government, and that's getting me think about the Kazakh government as well. I just recently came back from Kazakhstan. I got to talk to some people who were with the government previously and whatnot. But what that's making me think, also knowing the profile of Kazakhstan as a mineral jurisdiction, they're the largest producer of uranium. Uranium is very strategic to the country. So there's always government involvement in uranium projects. But if graphite is as strategic as you say, and there would be an actual shortage for natural graphite, wouldn't the Kazakh government want to get more involved in that plan of yours in a similar way as to how they are involved in uranium mining? Is that a possibility?
Look, the Kazakh government has been extremely supportive. I've got to say, it's been really refreshing for me as a professional from Western Australia, where Western Australia's put out there as one of the world's preferred mining jurisdictions, but I can tell you from experience that it's getting harder and harder to start mines in Australia and in many countries. And in many ways, the bureaucracy in terms of red tape and green tape has probably swung too far. What I see in Kazakhstan and what I've found through experience is that their systems and structures are all modelled off the West Australian system. Their environmental code is modelled off the European code, but they're more, I guess, in terms of the implementation of that, they're at the stage of maturity where it's being implemented in a very fit for purpose manner. We've already achieved our environmental permit for the mine. We've already achieved our mining license. And, we see a real pathway to get things done. And we see that within Kazakhstan. They've got there's an organisation called Kazakh Invest, which is a government funded body that is there to attract foreign investment to the country, and they're most helpful in us in terms of arranging meetings with various ministers if there's roadblocks that we need addressed, in terms of getting introductions to industry and so forth. And we've really found moving through Kazakhstan, we're now very well connected in both government and business senses to be able to deliver this project. And it also I think goes further than that as well, in terms of this real high level interest in critical raw materials. Now, critical raw materials, by definition, is anything that is dominated geopolitically in one area, and there's no more critical mineral than graphite, in terms of China dominating 70% of the world's graphite mining and almost all of the world's lithium-ion anode production. Now, because of that, Kazakhstan is an alternative, and you're seeing a lot of high-level conversations happening between the European Commission and Kazakhstan. There was an MOU in 2022, also with many other countries. Kazakhstan, the European Commission, and Australia and the US are all members of this mineral security partnership. And this is now trickling down through all of those governments, where there's now specific institutes being put in place with funding to deploy on these critical raw materials projects. We're in the process. Obviously we can't say too much, but we're actively applying for all sorts of funding initiatives through these pathways that we see potential not only to fund our studies costs, but that $62 million starts to look pretty small when you consider the amount of funds that are out there from these government institutes at this stage, mostly in Europe and mostly in America through the Development Finance Corporation. That's quite exciting for us. Kazakhstan is still on that journey. They're yet to, they do have state-owned mining enterprises, but in terms of specific grant funding and the like, maybe that's something that will develop in the coming months and years, but huge amount of support.
Listening to you talk about graphite as a whole, and China and Kazakhstan, the European Bank and everything, like that's also an interesting part about Kazakhstan, that it's kind of in the middle of it all, from almost all sides. I mean, it's from east and west, of course, but also from the north. Do you have to, as a company, make somewhat of a strategic choice between east and west, or east and north, or something like that?
Look, it is certainly something that we do think about strategically. So Kazakhstan is wedged between China, Russia, and Europe. And they play their cards very well in terms of they're friends with everyone and enemies with none. And look, I think that strategy, should also be applied to Sarytogan, in terms of, look, we are a little bit biased towards facing the West. And the reason I say that is China has their own graphite. They dominate graphite. To be frank, they probably don't need too much of our graphite. But where our opportunity is to face west and to face Europe and to be a preferred supplier of graphite products into Europe. Now, in saying that, of course, we do business with China. We've got a long record. Australia's got a very commercial record with China, going over decades with in the iron ore industry as well, which is entirely reliant on the Chinese economy. And so, look, as Australians, we're very happy dealing with China, and we find them very commercial. In terms of the construction of the plant, look, all mining equipment, it comes from China. Everything comes from China. And so, of course, China's going to play a big role in the equipment supply for the construction of our project. And look, we're open to offtake that way as well. But as I mentioned, our predisposition is to face Europe, and our predisposition is that they're not necessarily mutually exclusive, even though in the current protectionist world that we live in, it's obviously shifting sands. But look, our intention is to be friends with everyone and enemies with none.
Is that achievable? Could you be friends with everyone and sell, if and when forward looking, of course, but could you sell to different parties? Like, could you have an offtake agreement with the Chinese and then still have an offtake agreement in country? Because I know that's an opportunity too for you in Kazakhstan, but also have some of it going due west. Is that an option here realistically?
Yeah, look, everything's on the table. You're quite right. Domestically, that's a good market for us. Obviously, we've got an enormous freight advantage for whatever we can sell domestically. As I mentioned, China has their own graphite. There'll still be opportunities to compete on quality, but we certainly, wouldn't be able to compete on volume with the Chinese offerings. But Europe, that's the more logical destination for our products. But look, we don't make those decisions, based on geopolitical setup alone. To be honest, we're commercial about what's best for Sarytogan shareholders. And we don't necessarily see us having to make a choice in that regard. But look, all options are on the table, and we'll see where we end up.
Well, talk to me more about the European involvement here in that case. I mean, what's and the European Bank for Construction Development, what's their part in the game here? Why are they getting involved in the first place? And does their money come with attached strings?
Yeah, look, very much so. So as I mentioned, it was an enormous due diligence process for us to achieve this investment, and I think investors should draw a lot of confidence from that, because I can assure you we had experts in every discipline crawling all over the work that we've done. In terms of what's in it for them, look, their mandate, the European Bank for Reconstruction and Development, they're owned by they're owned by 73 member states, including the European Commission, and also Australia's a minority shareholder, actually. But look, their mandate, they first came into being, with the fall of the Berlin Wall and the reconstruction efforts required through Eastern Europe. That was their mandate, and they enjoyed a lot of success with that. I think they've deployed about 200 billion euros over the years. They're moving further and further afield, moving into Central Asia, and Kazakhstan is a key hub for them. They get involved in a lot of infrastructure projects. There's a solar farm actually right next to our proposed purification facility that they funded. And so, look, for them, they love Kazakhstan as a jurisdiction. They're also very big on ESG, and we were able to satisfy them in terms of our performance there. but also the whole energy transition metals is also a key theme for them. So we ticked a lot of boxes for them in terms of the funnel that they use to whittle down which projects for investment. And really, what are they looking to do? They're looking to grow a customer, essentially. They're looking to obviously uplift the economy, developing economy of Kazakhstan, but also to grow a customer. And what I mean by that is that, as you've rightly identified, it's difficult for a company with an $8 million market cap or whatever the number is to go and start a project, in this case for $62 million. And in fact, they call this particular program, well, we slightly predated it, but they've now got a program called JUMP, which is Junior Mining Projects. So they've recognised that for these junior companies here that are going to provide the green metals for the energy transition, many of them are in a similar situation to us where they actually need some assistance to take that jump from a junior company to a producer. And look through that. They'll obviously there's no contractual obligation, but look, obviously they're interested in being involved in the debt package for the full development of the mine and equity as well. As I mentioned, there's no concrete obligation for them to do so, but that's obviously their intention.
Hmm. So when you go and talk to potential offtake agreements, to potential off-takers for agreements, I'm trying to skip words here. Maybe I've had too much coffee. There's never too much coffee. Anyways, different topic. When you go and talk to these people, what is it that you're talking about? What's the topic? What are the questions that you're asking? What are you asking them? What's on the table? Just kind of walk me through one of those meetings as far as possible.
Yeah, look, it is an extensive process. It's as they say, you've got to kiss a lot of frogs before you find a prince. And look, Antonio and I are on calls every other evening with potential customers, right around the world. And there's been hundreds of these conversations that we've had since he joined. And look, for each of the different product families, we have got a good level of interest from some very reputable companies. I will say the qualification period is extensive in graphite. And look, we knew that at the start of this journey. Even at the IPO, I had quite a lot of investors asking when we were going to do offtake agreements. And I thought that was very naive. And I had to explain to them that it does take many years. At the time we had an inferred resource, we didn't have a metallurgy solution, we hadn't done a study. We're obviously a lot further down that road now. I'm really proud how far we've gone down, but there's still a lot of work to be done. So a lot of it comes back to the discussion is initially an introduction to the project, and then the discussion moves quickly to the provision of samples for them to test and to validate what we've said we can do, and for them to find that out for themselves. So to that end, that's one of the reasons why we're investing heavily in marketing and heavily in this customer sample generation program. And I mentioned right at the start as well is that we've got to progress. For me, there's three pillars to this project success. One of them is the DFS, and yes, that's fun, but to be honest, that's probably the easy bit. The other pillar is finance, and the third pillar is marketing. And you've seen far too many graphite companies over the years go through and do a DFS. And look, it's easy to do. You can give an engineer a few $1 million and they'll do a DFS for you. But a lot of those companies have then had that DFS sit on the shelf for 2 or 3 years and go stale and fall into oblivion. We've actually been progressing all three of those pillars at once. And some people may look and think, gee, we haven't progressed the study world much since the pre-feasibility study, but it's really addressing that concern that we've got to move all of those three pillars forward together. And it's a little bit of chicken and egg, right? A customer doesn't want to buy a product from a company that's just a dream, And similarly, you can't finance a project, without some good marketing support. So we're progressing them in parallel. But that sample provision, look, that's progressing very well. That's about $1 million investment all up. It initially started with a trial mine last year. We did some milling tests in Kazakhstan that actually showed that our assumption in the pre-feasibility study, even though we assumed it was soft, turns out it's very soft. So those crushing costs will come down even further. That sample is now in Australia, and we're just commencing now some bulk flotation. And the net effect of that'll give us 200 kilos of customer samples. So we've got these customers now queued up, ready to receive these samples to test them. And the objective is that over, and in parallel with the DFS, we'd be looking to secure offtake for each of our 3 product families.
What's your timeline for getting that done? Is there an internal deadline that you've got set, or how do you see that happening?
Yeah, so look, it's different for the different products. So and again, this ties into our stage development strategy. It's I think well known and accepted that for the lithium-ion battery world, it's a long qualification process. People often say it's about a 3-year process, and maybe we're sort of 6 months down that process. But in the middle, in terms of the ultra high purity fines product for applications like alkaline batteries and lead acid batteries, that's something that can be done a lot quicker. And perhaps we're 6 months down an 18-month process in terms of that market. But for our upstream development, that's actually something that can be done much quicker. And the discussions that we have with customers there is quite often not only about sample provision, but also their desire to see full-scale commercial samples as well. So I guess there's that continuum from, I guess, at one end a 6-month qualification period, and then the other end a 3-year qualification period. And that marries in perfectly with our stage development strategy. And again, that comes back to those pillars in terms of the market progression, which I've just spoken about, finance in terms of what's affordable, and then similarly in terms of the studies as well, investing in that upstream study first within our current funding envelope.
What is the rest of the work that has to happen in the meantime, as well as the immediate future, as well as what happens after that? What are you working on right now?
Yeah, so right now, look, it's an exciting time. There's a lot of work going on. I mentioned the marketing work going on, financing, chasing these development finance institutes. And at the practical level, on the deposit side itself, we've got 2 drill rigs spinning, which is always an exciting time for any company. And what that work is designed to do is doing, if you like, the infill drilling, the reserve definition drilling. Even though we've got an indicated resource, which should be sufficient to finance a project off, because of that disconnect between the giant size of our resource and the relatively modest development scale of 50,000 tonnes, even though we have how many drill holes do we have? About 120 drill holes across the deposit. Once we throw those pits for the first 25 years of mining, there's actually only 10 drill holes in that first 25 years of mining. So even though it's indicated and the geological continuity is there, we need closer space drilling for our detailed planning. So that's happening. So we're drilling it out to 50 by 50, and that work is happening now. We've got some environmental surveys happening, baseline environmental surveys, even though we've achieved the local Kazakh approvals. Look, there's still a recognition that the international banks are going to want some additional environmental studies, so we're doing those. We're doing a power study is nearing completion. We've just completed some water drilling, and now we'll use the data from that to apply for the water license for the project, something really important to stitch up. And looking to acquire some land for our downstream facility. So there's plenty of work going on, and we've got a really busy team progressing these aspects. The next sort of major piece of work that you'll see will be the award of the DFS engineering itself to do the capital and operating cost estimate. But to be honest, that's probably only 20% of the overall study effort. And in my experience, the best way to waste money with a big engineering firm is to go and start a definitive feasibility study before you've done all of these supporting activities. And I've seen that done very well, and I've seen it done very poorly. And a DFS isn't the time to be optioneering. We want all of these preliminary works all done, everything queued up, all of the data there. There's more data coming in with our metallurgical variability test work as well. All of that data queued up, and then the engineer can actually move through the study in about 6 months. And where you see these studies go bad is when guys like me are in the engineer's office every week coming up with new ideas. All of that just costs variations and time, whereas I'm pretty pleased with the approach that we're taking. Having seen studies done well and done badly, I'm pretty proud of the way we're approaching this one.
When's the DFS going to be published?
Mid next year. And that is a cast iron guarantee. I've got my performance rights aligned with that. And and indeed that's cascaded down to the rest of the team as well. And look, that's very achievable in terms of the schedule. Like I said, it's about a 6-month activity. Now, nominally a DFS is 18 months, but it's all of the preliminary stuff that we've been working on that is on the critical path. The actual cost estimation bit is the 6-month part of that component.
But why I'm asking again or checking in for it again is because I'm thinking, are you going to have to do an updated PFS based on a new OWI re-engineered flow sheet or something like that, or are you just going to go straight for DFS?
No, so look, the pre-feasibility study, look, and this is also a firm part of my belief and what I've learned about studies over the years. The time for optioneering is in the PFS, and we did that extensively in the PFS. We considered chemical purification versus thermal purification. We considered building the purification plant in Kazakhstan or elsewhere like Eastern Europe. We considered the scale of the project. I pushed that to be as small as we could practically make it. So to be honest, we looked at multiple tailing storage options. We did a bunch of strategic mine planning. And so all of those key questions were resolved in the pre-feasibility study. And here we are now with more detailed information coming in terms of water and power and metallurgy and so forth. And everything is aligned with the recommended go forward case from the PFS. So really no more optioneering, just engineering.
Well, I'm asking because in some of your recent news releases, you do talk about your metallurgical testing showing softer ore, essentially. Can that impact recoveries, or what are the implications of that?
Yeah, so look, that softer ore, look, the implication from that is just simply in terms of the size of the mill that we'll build. So there'll be a capital saving on the mill. There'll be some operating cost savings in terms of the power that mill will draw. There'll be operating cost savings in terms of the amount of grinding media that we need. And so really, it's still within the same structural steel, just a slightly smaller mill, sucking less power and less media, which flows through to a direct cost saving. But ultimately, in terms of the performance, look, the metric there is to grind it to 100 micron. That's the target that all of our test work showed. and it's just a question of how many dollars you need to achieve that. And as it turns out, we're probably going to need it in that particular aspect of the flow sheet a little bit less dollars than we assumed in the pre-feasibility study. So that's a good wind, and of course there'll be swings and roundabouts in the study. But it's nice that the first one we uncovered is in our favour.
Well, talk to me more about these swings. That would have been my follow-up question as well. I mean, from the perspective of IRR, payback, MPV, CapEx, what are your expectations for this DFS?
Yeah, well, look, all I can do is refer back to the pre-feasibility study. That is still our best view of the world. We don't have any reason to change those numbers, so they still stand on their own. So for our stage one development, CapEx of $62 million, IRR, or EBIT margin of 61%, IRR of 35%, payback of 3.4 years, an MPV of 151 million. So that's a great little standalone project in its own right. And then in terms of our stage development, once we get down to our full implementation of having 3 thermal reactors in place, the CapEx comes up to about US 256 million, still with very similar EBITDA and IRR rates, IRR 33%, 4-year payback, and an MPV of US 518 million. So those numbers still stand as our best view of the world. And, we'll go through the DFS, and yes, there'll be swings and roundabouts. Some things will go up, some things will go down. But at this stage, we don't have any reason to believe we'll land somewhere different.
Essentially, no major changes or updates or downgrades. You're not expecting anything to change majorly from PFS into DFS.
No, as I mentioned, there'll be swings and roundabouts. Some things will go up, some things will go down. But look, when we look back at the pre-feasibility study, we feel that it was, appropriately conservative in the areas that needed to be conservative. We chased down the value in areas like strategic mine planning and so forth. And so, look, that PFS is plus or minus 25%, and we're taking the DFS to plus or minus 15%. At this stage, it's very much taking that preferred case of the pre-feasibility study forward.
Well, how much of the attention and money that you have right now, that might be a good point too. Let's talk about that first, actually. Money. You got about what, $33.5 million bucks. How
Yes.
much of the money they have right now are you going to be spending between now and mid next year? Is it even going to be enough to get you to the DFS finish line?
Yeah, look, no, it won't, and that should be no surprise to anyone. But at the same stage, though, is we're not intending to raise money on the ASX at these current levels. We feel it's highly undervalued. As at the end of the last quarterly, we had 3.5 million, so there's no rush to do any capital raising. But also, we're more hopeful of funding through other sources. This is through a number of fronts, and obviously I can't say too much, but there are a lot of funding available for highly strategic projects like this, and they are looking far more attractive to us. And whatever we do, it'll be in the best interests of shareholders, and our intention to be highly value accretive, and I think maybe some of that might be built into our share price as well, in that people are probably looking at us. We're sort of nibbling around the edges with these early works on the DFX, and they really want to see a strong signal of the full commitment to the full DFS. And look, I think the signal of the infill drilling, that's a big investment. The customer sample generation, I think investors can sort of look at this and say that, hey, we're firmly committed to delivering this DFS, and yes, we'll need more funding, but we're not going to do it on terms that aren't value adding to shareholders.
Are those things that you're referring to or talking about potentially doing, would that be debt, equity, asset level dilution as a JV or something like that? Is all that on the table, or do you have one preferred way of moving forward and financing it with, again, a potential strategic is what you're referring to here?
Well, I can tell you debt and any convertible instruments are absolutely off the table. So look, equity with major investors in terms of bigger chunks rather than just going to the retail market with the Aussie brokers. Now, of course, we reserve the right to reassess that strategy every hour of every day. And we'll always make the best decision in the best interest of our shareholders. But what I will say is that this project is highly strategic, and we're getting a lot more love overseas than we are from the Aussie retail market.
That's an interesting path to go down, although I assume you're not going to be able to tell me too much about it right now. Or maybe you don't even know yourself. What about the timeline on that? When would you want to have that potential financing from, again, a potential strategic here?
Oh, look, it's, continuously, look, this is the life of a MD of a development company. We don't have any revenue at this stage. Our activities are funded, are entirely dependent on our ability to raise funds at the best possible deal for shareholders. And I guess, what I've really learnt in this game as being a MD of junior companies now for 6 years, I guess the realization that yes, there's all the project development stuff, and yes, that's my background, and yes, I enjoy that, but my biggest job for shareholders is to keep the money coming in on good terms. And look, you look at a deal like the EBRD deal, which was by the time we closed on that, it was 100% premium to market from a sticky investor, an investor who can really help us in terms of help us develop the project and navigate the financing and so forth. So I guess the point I'm making is that's my focus every day is getting the next deal, and as soon as I've done one, it's on to the next one, and the objective is to do it on the best terms for shareholders, and that's a big part of my job.
Well, you do have kind of a split focus, or are you building a bit of a split focus right now, though, with the copper project as well? How much of your attention is going to be divided, or how much of your attention is going to go toward the copper project? What's happening there? What are your plans and timelines there?
Yeah, so look, the copper project's really interesting. Look, we, with the softness in the graphite market, then we really saw that, coming, I guess 18 months or so ago. And so, we were keen to, I guess, diversify. And we identified our strategy as, what's our sustainable competitive advantage? Is it the fact that we're playing in graphite? No, it's that we're playing in Kazakhstan. At the time, we were the only ASX listed company in Kazakhstan. There's one other who's entered since. But our ability to move around Kazakhstan and to find new projects is what we consider to be a real competitive advantage. Now, we also had and have a very good geological team who's done a great job on Sarytogan, and they're presently doing the drill out on Sarytogan. But we were keen to keep those guys engaged, especially as Sarytogan moves on from the drilling and into development work. And look, I've seen far too many geological teams get disbanded as victims of their own success in these project developments. and we really want to capitalize on that skill set. So we sent the team. We said, righto, the strategy is Kazakhstan. It's battery metals. And we sent the team looking, initially we went looking for spodumene. And of course, at the time, spodumene was booming, and people were listing lithium companies off the back of a few rock chips here in Australia. And we went looking for spodumene in Kazakhstan, and we formed a view. We might be wrong, but we formed a view that the rocks in Kazakhstan are the wrong age for spodumene bearing pegmatites. And so then continued to work through the different commodities and landed on copper. And the reason we landed on copper is really, look, Waldemar's got a track record of success in copper. Kazakhstan has 4 out of the world's 5 lowest cost copper mines. Despite the mines in South America being bigger and higher grade, Kazakhstan can still, the mines are more profitable. And the reason for that is you've got low cost and skilled labour. You've got low cost power. You've got low cost diesel. You can buy diesel on the side of the road for US 50 cents a litre. And despite the grade being lower, the profitability is higher. So we'd love to discover another one of those. And what we've done is we've picked up some exploration tenure, a lot of exploration tenure. We've got one license, which is 282 square kilometres, another one, I think it's 120 square kilometres. We've flown the air mag, we've collected 6,000 soil samples, and we've worked up now several prospects, of which 2, I think it's Ilkin and Amanbai, that are our 2 favourite prospects that we consider to be drill ready. However, it's worth noting that our funds are presently quarantined for the graphite project. The money that came in from EBRD, they expressed a strong desire to see that money spent on the graphite project, rightly so. That's their strategic interest. And so as such, the copper projects, we've just really been doing the low cost work around the margins, having the geologists do some soil sampling, do some mapping and some trenching, and build up these targets. But we do need alternative funding to take the next step and drill those targets. We think they're very exciting targets, but we will need a different source of funding to drill that. So either that means bringing in an investor at the headco level on attractive terms, or given that we think our graphite project's undervalued, we don't really want to dilute it. We'll be looking to do something at the project level on the copper project. So it would be a farm-in type arrangement. And look, we've been in discussions with several companies looking for the right company to come in as a business partner in a traditional farm-in type arrangement. And when I think back to our competitive advantage, I think we've done what we set out to do, in terms of we saw a gap in the market, we saw prospectivity in Kazakhstan, we saw vacant ground, we saw a skill set within our geology team, and we've grabbed these assets. We've spent less than $1 million progressing them so far, and in terms of the next step for the copper exploration, we'll be looking for the right investor to come in, and our preference at this stage is a farm-in type arrangement.
Why don't you spin them out and finance them just completely separately?
Yeah, look, that's on the table as an option as well. Look, I think at this stage, those assets, being drill targets at this stage, probably aren't a standalone listed company in their own right. But potentially to do something like that, you'd be looking to team it up with a more advanced asset.
Do you have any geophysics or anything else planned, or anything, any assays? You mentioned trenching. Do you have any trenching assays in hand that are soon to be announced to the market, or when are we going to have some more data on the project?
Yes. So look, the geology team are presently engaged on the drill out of Sarytogan, but all of the work they did earlier in the year, more soil samples, more analysis, more mapping, more trenching, those results are all pending, and I expect to get another 1 or 2 good announcements out, continuing to get investors excited about the potential of drilling these targets. We think they're excellent targets. We think that the work that we've done and the historical work is really quite compelling. We also think that the work that the Soviet geologists back in the day did were under very poor conditions. Typically they'd only get 50% drill recovery, and so a lot of and of course they were looking for 2% copper. Anything less, they'd drill a hole and move on, and sometimes they wouldn't even bother, putting the drill core in for assay unless it had visible mineralization. So we think there's a huge amount of opportunity, but as I said, it's not within our current funding envelope, so we'll just continue to progress it around the margins. But make no mistake, we think they've got real discovery potential.
Discovery of what? I mean, is it porphyry, skarn, VMSs? Is it sedimentary copper? There's a bunch of stuff that could be in that region. So what are you really looking for?
Yeah, look, the primary target is copper porphyry mineralization. With a few gold credits. Something like the existing deposits in operation in Kazakhstan. Most of them porphyries, and that is absolutely what we're targeting, and that is the signature that we're seeing in the geology and the soil sampling and the aeromag. There's a lot of those prospects, particularly Ilkin and Ammon Bay, are absolute textbook porphyry targets.
Would you have to expand your team though to work on it? I mean, let's assume, and again, this forward looking in, but the trenches come back positive. You want to do some geophysics and so on. Would you need some porphyry people to help you deal with that, or do you think you have the team to deal with both projects at the same time?
Yeah, well, certainly in terms of boots on the ground, we've got our geologists. Look, in the company, there's 4 geologists in Kazakhstan on the ground. And then, of course, there's also Waldemar and myself. I don't have too much experience in porphyry copper exploration, but Waldemar does. He has a track record of discovery in Kazakhstan. So very much the exploration strategy is being driven from Waldemar's expertise. But look, we'll continue to look to sort of supplement that, bringing in other experts to peer review the work and make sure we haven't missed anything with these targets.
What about there's other porphyry teams working in country? I visited one of them again not too long ago. What's your relationship with some of the other porphyry teams in country?
Yeah, look, it's a really interesting aspect. Firstly, all of the majors are up there. BHP's doing their sort of incubator project with East Star Resources. Rio Tinto's up there. Fortescue's up there. I met a drilling contractor that Fortescue actually flew down to Perth to show them their operations and attend a conference, and he did 40,000 metres for Fortescue last year. So you don't read about that, because it's not material for Fortescue. You see the likes of, Ivanhoe entering into $120 million JV with Palace Resources. Palace have got a large land package, and they're running a sort of artificial intelligence strategy for exploration. We probably prefer a boots on ground approach, but that's brought in 120 million from Ivanhoe. You've had Aris Minerals. They enjoyed a really good drill hit in a few months ago and had their share price triple. And so there's some really good action going on in Kazakhstan. We think it's a really exciting province. This porphyry belt weaves its way from Mongolia through China, through our part of Kazakhstan, central Kazakhstan, and then up to the north as well. And there's some really world-class deposits there, and we hope to find another one. The other point I'd make in terms of those peers is, and And this sort of harks back to the government relations as well, in that we're all part of this Kazakh Chamber of Mines. And shout out to Alex Walker, who did an amazing job. He's CEO of eStar, setting that up, and that's really now got a life of its own, and really progressing government relations and that cooperation between the different companies, all trying to achieve the same thing.
Hmm. I recently spoke to Alex as well. I think I spoke to Simon, Simon Cooper of Palace. I went to see Eris's
Mm.
project. I spoke to Alex. I've spoken to a bunch of people in Kazakhstan. It is an interesting place and developing place for sure. Has with your copper exploration project specifically though, how's the local communities? How close are they? Are they? Do you have to get any social approval before you can do more work? Any additional permits? What does that look like for you?
Yeah, look, that's a really good point, and one that I'm proud to say we're well ahead of the curve. The copper project is only 20 kilometres away from the graphite project. So obviously for the graphite project, we're quite advanced in our social engagement, good relationships with local landowners, local Akims or mayors and communities. And, we're running a bunch of, public consultation sessions, and we have been over the last 12 months with those local communities. So really getting, doing that piece, which is important. And so in terms of an early stage explorer, we've actually got a presence um, in the local community already, which gives us a great advantage. We've also got within our team, people who are very good at this side of things. One in particular, shout out Maxim, who is our one of our directors of our local subsidiary in country and does all things logistics. He actually speaks Kazakh as well as Russian, and that Kazakh, especially in the rural areas, and it's becoming a bigger and bigger thing in Kazakhstan. They're teaching it in the schools now, but it really opens doors in those local communities to be able to walk in and talk Kazakh and build those relationships. So for the copper project, look, we've got land agreements with all of the underlying landowners, and we're fully permitted with everything we need to go drilling and exploring. And then furthermore, when we move into the development side of things, we're beautifully placed with all those relationships from the graphite project. The main highway from Astana to Almaty through Karaganda actually runs right through the Bainazar, our main copper project, right through the guts of it. And that's always a good thing for any mining project. And then all of those same benefits we enjoy in the graphite: low cost labour, low cost diesel, low cost power. There's just power lines crisscrossing all over the place. All of those benefits, rail, all of those benefits would all be available for future development, should we be successful in making a copper discovery.
Hmm. What does all of that do to your G&E? I mean, managing the local communities and everything else, and potentially, or maybe not needing new people for the porphyry stuff. Where does that put you on expected G&E for the rest of this year?
I'm sorry,
Where,
G&A is.
oh, as in just operational expenses, non-drilling expenses, so general and administrative expenses, that'd be marketing,
Yes.
salaries, and everything else.
Yeah. So look, I think the spend profile sort of continues, from what we've done for the previous 12 months. Look, we do have, I think having a team, of 8 people in Kazakhstan, that's quite a luxury. Often in Australia, you're reliant on contractors. But we are able to access, really good quality people locally educated in Kazakhstan at quite reasonable costs. So essentially, that team size is expected to be maintained from the last 12 months to the next.
Well, because you said you're going to do more marketing in terms of Sarytogan marketing, not graphite marketing in this case. So what are you going to, how much money you're planning on spending on marketing, and what exactly are you spending it on?
Yeah, so look, marketing wise, look, we've done a lot of things over the years. At the IPO, we did the Next Investors thing, which was quite successful at the IPO itself. And look, we uh, attend a whole bunch of conferences each year. We go to IMARC in Sydney each year. We go to RIU in Fremantle each year. Um, we went up to a show in Kazakhstan a month or so ago, and there's some really good prospects for potential investors coming out of that as well. Look, we do marketing in terms of, our website is set up on this Investor Hub platform, which gives an opportunity for shareholders and investors to engage directly with me to ask questions on that platform. The platform also provides us an opportunity to upload videos to accompany all of our announcements, and I'm hoping this video would be a piece of that program as well. We do the Bulls and Bears program where our news articles get pushed out into a bunch of newspapers on the digital platforms on the east coast of Australia. So you're talking the Age, the Sydney Morning Herald, the Brisbane Times. I'm not sure if that's correct, but the three big rags newspapers over on the east coast carry all of our stories as well.
Hmm.
We did the one-to-one event in London last year as well, which also resulted in some really positive introductions. So look, all up in terms of marketing, not product marketing, but all of that conference and so forth budget. There's probably about $100,000 a year in those endeavours.
Hmm. And that's for this year, or that's last year that you're talking about
Look,
cost?
that's ongoing. That's ongoing. That's an
Hmm.
annual 12 monthly rolling spend.
Okay, sure. That makes sense. Sean, what is it? I've been through most of my questions here looking at it. I was looking at your presentation. I think we've been through, you touched upon everything that you've got on here. What am I forgetting to ask you? What did you come here hoping to talk about that I failed to bring up?
Um, Look, perhaps the graphite market more broadly. I have, we've spoken about the project, the company. There's probably two key areas. Probably the graphite market in terms of that sentiment, what's driving that, and then the other one is Kazakhstan as a jurisdiction. And I know that you're very au fait with it. You've visited the country yourself. But I've got to say, especially amongst the Australian investor community and a lot of people who watch this video. Look, they wouldn't be able to put their finger on a map as to where Kazakhstan is, and of course that movie Borat was didn't do Kazakhstan any favors, and was actually quite disgraceful in my view actually. And I think there's a piece to do with our investors to really educate them on Kazakhstan as a jurisdiction, because I know you understand it. I mean, what's your perception of Kazakhstan as an investment destination for mining?
I think the infrastructure is the thing that surprised me the most, and you see it in our video report. It's almost funny to see the step and all those power lines, because that's the only thing you see. It's step and power lines, and every now and again there's a road or a highway or something like that. Now I was born in Eastern Europe in Bulgaria, so it's not too far actually away from what Bulgaria is today, and better in some aspects, not in all aspects, of course. But Bulgaria is a European Union country, right? So you don't think of Kazakhstan and think like, oh, this is going to be European Union level infrastructure and overall feeling in the country in terms of the cars that people drive in Astana, or even in towns like Ekibastuz, the way they're built and so on. So I was impressed, positively impressed, even though I already understood the jurisdiction, having that ex-Soviet bloc, having seen that firsthand. I was still positively impressed by the country.
Look, thank you so much for sharing that, Anthony. I think that's important that that comes from someone other than me. Look, I think um, I often joke with people that I should work for the Kazakh Tourist Board because I spend a lot of time promoting it. But just things people just wouldn't expect it. Things like Air Astana, the flight that we take from, I go up via Bangkok to get to Kazakhstan, and Air Astana is just amazing, as good as any of the Middle Eastern airlines. And one of the reasons for that is, the wealthy people in Kazakhstan, and demand that level of service. And you're quite right. There's a lot of money, a lot of expensive cars driving around these cities. There's beautiful, Ritz-Carlton hotels as good as anywhere in the world, and people in Australia just wouldn't appreciate that at all.
Hmm.
And then over and above that, you've got this, Soviet infrastructure, which is an entirely different approach to what we're used to in the Western world. It was very much this build it and they will come mentality. And that infrastructure, power lines are a classic. There's this power line that goes from Ekibas through to a town up in the north there. It's the world's highest voltage power line. Why?
Hmm.
Because the Soviets love building things big, and those power lines go everywhere. The roads are excellent, but even I've seen development in the 3 short years I've been going up there. That main highway between Astana and Almaty was just continuous roadworks and could be quite slow, but now it's complete, and it is dual carriageway, top-notch motorway going right through the middle of our copper project, and not far from our graphite project. You then see, the other aspect is renewables coming online. We do enjoy low cost power thanks to thermal coal. But of course, that's being substituted, as it is everywhere in the world, with renewables. I mentioned EBRD been funding solar farms. There's one right next to the area we want to build our infrastructure at, our purification. But also just in between my two last visits in November and April, a wind farm popped up as well on the side of the road. So there's a lot going on, and I think a lot of Australian investors and European investors would be, quite staggered at how the economy there, how strong it is, and how well developed it is. Now, obviously, as you move out to regional areas, it's not all Ritz-Carlton and BMWs, but it really is a fabulous place to develop a mining project, and to work and to visit.
Hmm. Well, you're here essentially to present a bullish case, and I understand that. But not everything is always perfect, or well, nothing's really ever perfect. What keeps you up at night? If you had a magic wand and you could change something with Sarytogan, or with the country, or with the graphite market, whatever else, you could wave it at anything, what would you wave that magic stick at?
It'd be investor sentiment towards graphite as a commodity more broadly. And I guess, I've been around long enough to know that this industry is highly cyclical. And, we're at the wrong end of that cycle at the moment. And that's where I'd wave the magic wand. Now, obviously, I don't have control over that. What I do have control over is to deliver the best and most robust project development that I can,
Hmm.
and continue to do deals for the benefit of Sarytogan shareholders. But look, I can see that sentiment returning. There is a great thematic. The thematic with the whole EV revolution, that's not over. You hear some of the rhetoric, but there's just enormous amounts of raw materials that are required. This geopolitical aspect really putting pressure on Western jurisdictions looking to secure supply, will be the beneficiary of that. You see the current pricing. Don't believe all the indexes you see, whether it's benchmark or fast markets or Asian metals or any of these price tracking websites. We're seeing some better data on the ground, and that's the benefit of being in the market, discovering these things. we're seeing as well, I think it's well established that, the Chinese synthetic graphite is, they're operating below the cost of production, and putting a lot of pressure on prices there. That's not going to last forever. And, I think in time, that wish of mine, it's bound to turn in our favour. Now, is that going to be in 3 months or 6 months or a year? I don't know. But what we can control is delivering a really high quality project. And to be frank, our project can compete at these levels in the cycle. You can have a look at those bubble charts that shows out the cost competitiveness of our project. To be frank, I think we're probably the only non-Chinese project that can compete with the Chinese, in terms of our operating cost to make concentrate of US $270 per tonne. Chinese average is about 250, but the rest of the ASX listed projects are typically up at 400, 450. So look, we've got a super competitive project. It can survive any level of the cycle. It stands up on every metric. And when the love returns to graphite, which it will, people are going to be looking and scanning and trying to find the best value, the best opportunity for a graphite investment. And I firmly believe that that's Sarytogan Graphite.
Well, that might be a podcast in and of itself, but will it? I mean, doesn't necessarily have to go back to natural graphite, or can we keep doing synthetic graphite? I think that's again a topic in and of itself. Maybe for another time. We've been at it for over an hour and a half now. Actually, 1 hour and 45 minutes. But I really do appreciate your time. It sounds like there's plenty. I took a bunch of notes, and so it sounds like there's plenty to catch up on. Hopefully, sometime in the future, as well as the copper stuff, as well as some of the work that you're doing. Met work on the graphite and whatnot. So I'm sure I'm forgetting to ask you a bunch of stuff as well for the first pass conversation, but I'm sure that people listening to this, if I've missed something, please let me know what I've missed, and I'll try to ask it in the next conversation. But Sean, I really do appreciate your time. Thank you so much for sitting down with me today.
My pleasure, Antonio. Really enjoyed it. Time flew, hey, and well done to the listeners who made it all the way to the end. But it certainly didn't feel like an hour and a half to me, and I reckon we probably only got halfway through the story.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know, and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias, and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company-specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias. Again, albeit clear or not. So always ask yourself what the incentive of your counterparty is, and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should, under no circumstances, be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. Also, unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find the company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."